Hi guys, it's Chris here. Hope you're well. This is another training video, and apologies if I keep repeating some of the stuff that we're doing, but I think it's really important to emphasize a few points because we get lots of beginners coming in. So here's the scalping setup on my 5-minute chart. I've just sent a picture from my iPhone so I can keep an eye on things while I'm out and about, and this is the same setting basically. But the important thing in this video I want to emphasize is the resistance and support areas which act as potential trades. So what do I mean by that? So we know that volumes, it's 12 o'clock in the afternoon, so we know that volumes are low, and there's probably some news coming out. I'll have a check in a minute. But the important thing is that at 6 o'clock in the morning there's no volume. Okay, there's no one up and about, there's no one going to make a big move on gold at 6 o'clock in the morning. Now 8 o'clock is much more interesting, isn't it? And this is 8 o'clock this morning UK time, London open, so there's going to be some action potentially. So at 6 o'clock we can say that this is an area of interest. So 1828.52 is an area where the price went up and couldn't go any higher. It came down. Okay, so that's of interest. If we go back to say there, that's what it looks like. So it failed to go any higher, and so that area is of interest. And you can do this every day, every morning. Get up early and just draw these lines. So this is a resistance area. Now as the price fell, it fell for a little while, for a few minutes, and then shot straight back up. But this area is now of interest, 1821.14, where it failed to go any lower. So once it's gone and done its business and gone up, then we know that this area is of interest. It's either going to act as support or it's act as resistance. Highly likely to act as support for a little while, but once it gets broken, this support area becomes resistance. If, for instance, this area here got broken, then it's going to change trends, isn't it? So at the end of the day, if it breaks through there, then this becomes support instead of resistance. So that's really helpful to know where the price is going to go to. Now, how do we execute a trade doing this? Well, there's a couple of things that we can do. The first thing we have to do is acknowledge the area of interest. So if for instance, you're out and about, you just put an alarm at 1828. So you get an email or an alert come on your screen to say, look out, something's happening here. In the same interest, I'm going to put an alert on here. So you just go left click, sorry, what was it? A right click, add alert. So it's going to add an alert there. And I will get an email and a pop-up and a sound will occur wherever I am. So that's an area of interest. So if the price comes up to 1821, then I will get an alert. And if it does come up, I will see what the reaction is. Is it going to change trends and go up? Or is it going to stay down and actually start to move down and continue down to, I've drawn a line here, 1810. So 1810 is of interest. Let me squeeze that up a bit so you can see that. 1810, which is the previous low of yesterday at 11:30 at night UK time. So what's likely to happen is that as the price moves up to 1821, it's going to find it difficult to actually, just spotted something else as well, difficult to actually make any gains from there. We can also draw a line from there to there. As long as that trend line is touching 3 times, that is your trend line. So what can happen, and this is convergence. The other thing to notice here, as I said in my previous message on my iPhone, is this is a double top as well. So the chances of this price actually changing trends at this stage are highly unlikely, because we've got a double top and it's hitting the 200-day moving average. That's what this line is, a 200-day moving average. This line, the 200-day moving average, is the most popular indicator professionals use. So use it. So what's going to happen a lot more than likely now is the price is going to move up here and there'll be convergence. So it'll be converging into this resistance area and this trend line as well. Not much going on at the moment, but we shall see in the next hour or two once the US market opens. But it's an interesting exercise, and it's something if you do it first thing in the morning, London Open, or even you can do it on US Open or Asian markets, you can actually calculate these areas quite accurately. Now, in order to execute the trade and to get in the position, we're using Heikin-Ashi charts. Your settings should be on Heikin-Ashi. Basically what Heikin-Ashi does, it gets rid of all the noise in the market, plus it changes colour. So as it hits this area of resistance, we don't know it's going to hit there and go down. We know that it's interesting, but then we wait for the Heikin-Ashi candles to go red. So that's interesting as well. We still don't execute yet unless you want to be aggressive. Totally up to you. But the stochastic's overbought, the CCI is overbought, so therefore the chance of this going down are very, very, very high. And as you know, I load up my positions, 4 of them at least, and then I take it out at this previous low here now. 1827 went down to 1821, so there's at least 4 pips there. In this instance here, the other thing to look out for in this is the shorts. If you don't want to get in there on the red candle, then you can get in when it goes short, but you're going to get some slippage there. You're going to miss out all that gap. Bit delayed, that one for me anyway. The other entry you can have, this is a 5-minute chart, so you won't have to wait long. You can actually go on the CCI when it breaks down below 100, because even at this stage you don't know it's not going to go up and up and up and up. You don't know, but the probabilities are it's going to go down. But once it breaks down below the 100, then of course it is confirmed that it's going to continue down. So that's a good entry. A little bit patient, but if you look at that, that's 5, 10, 15. You've got to wait 15 minutes to get into your entry. That's all. And then you set your stop at the previous high, plus your spread. Don't forget your spread. And then your target's 4 pips. Again here, overbought. Not really a legitimate trade because the CCI is not overbought. I'd like to see both overbought. Nonetheless, if you're a little bit more aggressive, you can go on the red candle. And away it goes. The other thing the CCI does very well, it points the direction it's going to go. So hopefully that's useful. A quick video, nonetheless I hope useful, and let me know how you think and how you're going to use it. Any questions, come back to me.